Hey YouTube, what's going on? Welcome to my YouTube channel. Today's topic is liquidity, and I'll be just touching about liquidity because there are a lot of material available on YouTube. A lot of people have talked about it. I have my own sauce, and I have a little bit different point of view about liquidity, but you know, it's still widely available on YouTube, so I'll just be touching it and how you and what about liquidity is you can use it in your existing strategies. I mean, even if you trade support resistance or whatever, you can still use it in your strategy. So that's what most effective thing about this liquidity is. It doesn't require a whole kind of a new strategy around it. It can just add up into your strategy. So in the previous video, I just talked about market structure, and importantly market structure based on fractal nature of price action, which is new concept, and there's not a lot of talk about this on YouTube. So you can go check my first video. If you haven't watched it, you can watch it. And we discussed on weekly time frame, and this was the bearish structure. This is the liquidity. I just want to tell you, this is the the main thing you want to look. What is liquidity? Liquidity means this. We call it raid as well. This is a raid. This is liquidity grab, liquidity stake, and raid, whatever you want to call it. um, when the candle takes over the previous wick and but closes below this level, that means liquidity is taken. That means a raid. This is a raid. So pretty much you can watch it here as well. This goes up and close below, similar with this candle, goes up closes below. But why it further went up? Because of this candle nature. These kind of candles will more likely fill up. So this filled up and took liquidity, came back again, and then dropped. So the main thing about liquidity is bigger the time frame, the bigger the move. Most likely the weekly and daily time frame will change the direction of the market from bullish to bearish, from bearish to bullish. But the most effective uh, way of liquidity, using liquidity, is to use it in accordance with the flow of the market. I mean, if you only trade weekly time frame, then use it based on weekly flow of the market. I know we do not trade weekly time frame, but it's just for perspective of the bigger picture here. So they took this liquidity. Let's suppose that we trade weekly time frame. So this is the bearish range. This is the bearish range, and price went up, took all this liquidity, and this is considered as a raid in the price action rate of the market. So what we do here is we actually, let's suppose this liquidity happened, then we wait for the next candle. The next candle is this, and we can take this rate, we can take this trade like that. So from this level to this level, we know that it is very likely that price will come back here. So I'm just for the example, because on the lower time frame you will see a lot of liquidity. So that will mess up the whole concept. So I just wanted to make sure that you understand properly and more clearly. So this actually means that liquidity is taken. This is called raid in the market. But let's say, what if this side of, we can see the liquidity is this side, even though this close below. But let's say when we see liquidity is taken at the bottom side, usually these kind of the raids are not as effective as the top side, because you have to see the structure of the market. And the if your range is bearish, if you are bearish, then you look for the top side of liquidity to be more effective. It doesn't mean that the bottom side of the raid doesn't work. They do work. The more the bigger the time frame, the bigger the move is gonna happen. So yeah, I mean, if there is both sides raids happen, then you go with the flow of the market. So this is it. This is the sauce. So the first thing is, candle has to close below the structure, whether this or that. You have to see it closed below, then it is good, it is liquidity, it is a red. If this close above, then your move is over. You actually going to change the direction of the market. So this is basically just it. I mean, if you can look here, this, a lot of people can see it as a double top, but what I see is as a red. Why? Because if you look closely, they took this liquidity, very subtle liquidity. If you can see it further down, they took this liquidity. There were stop losses, there were buy stops, there were break even stop losses. They took everyone, and this was more than enough for them to drive the price lower. So I would say, when the candle closes below, this is it. But if it closes above, you wouldn't want to touch that, and that's the rule. I mean, this is liquidity. A lot of people just use buy to sell candles, sell to buy candles. That is not what I use, what I personally use, because those are the misconceptions, or you can say people don't really understand. Look at that. This is liquidity. And what you can do is you can have some kind of a rule around it, that if liquidities happen, if there is a raid happen, you need to see a break of structure, some kind of, whatever you want to see it, like 1H, 15 minute, 30 minute, whatever you want to do it. You want to see a break of structure, then and then you want to look for taking a trade. So this is another confluence, and this adds up with your striker. So this is it. This is I wanted to talk about. And if we go to the daily time frame, you'll see a ton of liquidity. um, Look at that. When this weekly happened here, then this liquidity, this rate happened here, dropped. Then you can see this rate happened, dropped the market. This rate happened right here, dropped the market. Then went up, even though it broke the structure, but still work. This liquidities work. I mean, you can even use that one. This rate happened, price just dropped, broke structure here again, and it just kept dropping. And the only bad example I can see is here, which I don't really like, when the candle closes above. So this actually means that structure is broken, and the price wants to go high. It's indication of higher prices. But when the next candle takes over, when the next candle, I mean, goes breaks the previous candle, that means that it's a buy to sell candle, and you can use that. um, you can use that as liquidity. But I'm pretty sure this if you go to the 2-day time frame, 3-day time frame, you will see this candle is will be closed below. So yeah, this is like that, and then this is like that. You see liquid is taken, price dropped below. But what happened here, a very important thing to know, that they taken daily liquidity here as well. So this liquidity taken, and the price is going, I'm pretty sure it's gonna go up. Why? Number one thing is weekly time frame. Weekly time frame is slowly starting to become bullish. It's not bullish, it's kind of a pullback. So it's in a phase. So if you look at the daily time frame, price went up, tried once to break the level, but it failed. But this candle was bullish. If you watch my previous video, I talked about this. And then it came back all the way and took further liquidity. So that actually, I think they're gonna break this level, and then they're gonna go near somewhere here, and then after that they're gonna sell the market, if they want to sell the market. So this is it. This sums up everything about liquidity, and it is, I call it raids. And this is it. I will be discussing in future videos, where I will be talking about trade recaps, my weekly market analysis. So right now, this is it. That's enough, and you got the point, and it's not really difficult. So I'll just leave it here, and I'll see you in the next.